G'day, Divergence traders. Today is I think it's Tuesday, the 30th, right? Let's see. Yeah, Tuesday. No, it's Wednesday. Oh my God, I can't keep track of the time. I'm losing my mind. Oh shit. Anyway, it's Wednesday, the 30th of August. How y'all doing today? I hope you've found some divergence setups. Not so good here for setups. Here's the opening right here. Excuse me. This is the opening bar. It rallied up. This is the NASDAQ. And then it came back down. All the people buying in here, well, actually, and sellers too. All the people selling, let's look at the sellers first. All the people selling in here, right, for like an hour and a half, what did they do? Do you think they knew where your stop was? Oh, for sure they did. For sure they do. They know it was right down here. That's why you see this big spike down, click, stopped you out, and then they took it back up. And then all the people who were buying down here, excuse me, they were good. They had their take profits up here somewhere probably, and they took their profit. And then what did they do? Well, all the people who bought all the way up here, they bought down here, bought here, bought here. Where would your stop be? It'd be right down here. Yep. Yes, indeed. And what did they quickly do afterwards? They quickly ran it up in 20 minutes, and then in less time, like 12 minutes, they rammed it right down your nose. Yeah, because they knew the stops were down here. And what do? They buy it off and take it back up again. Yeah, it looks like, you know, support and resistance traders are trading here. They are, but it's more so that they know where the stops are. They know where to trigger them. And think about it. If it is the exchange that's doing this, do you know why they would do it? They're not making money per se, you know, in the market, whether it goes up or goes down. They're making money on all the fees, the exchange fees, the clearing fees, and brokers are making money on the commissions, everything, all those fees. And the more orders they trigger, the more money they make. You know what I mean, Jelly Bean? Yes, that's what it's all about, in my opinion. I don't believe that volume moves the market. I believe the exchange moves the market to where the orders will be triggered, whether you're taking a profit or whether you're taking a loss. Because whether you take a profit or loss, they're going to make money when the orders are either opened or closed. See what I mean? Okay. And this was a good, you know, TP right here. Yeah, this is a good TP. Let me show you the TP. That explains it. That's a TP. That's a screw me TP. Anyway, that's what I believe. I could be wrong. I could be wrong, but I don't believe it's based on volume. I believe it's based on how many orders the exchange can trigger. That's what I think, man. Oh, my shove it finger's hurting me right now on my left hand. Oh. Okay. There's no divergence here today. Not on the 5 minute. Well, I guess you could say there is. It was very difficult to even look for it or try and find it, though. It's right here. Okay. It was there. And you would have got in right there. And at that time, if you would have got in there or there, okay, after it crossed up, if your stop would have been right here, okay? And they came and they got your stop. So that was a losing trade. That's it. That's all. Okay. See how they're playing games with you today? You can see it. I know I can see it. Let's look at the Dow. The Dow also created a TP. But we do have, yes, we do have divergence right here. Very hard and very slight to see it, but trust me, it's divergent. See this? See that? That's it. See how vitally important it is to this little window where the OSMA is. See the OSMA? 12, 26, 9. Those are the standard settings for the OSMA. There's no need to change the settings. Okay? But you see how important it is to see your divergence properly. You need to drag the chart up so you can see it. If you just leave it down here like I do, you got to move it to see it. So anyway, long before, right here, long before this is when the stock market opened up, right here, this long-bodied baton, yeah, the long-bodied baton is there. Okay, so we would have got long right here. Our stop would have been very little. This is the Dow. So like 40 points, whatever, the stop. Went up 190 points. Yes, indeed. Did we have any scalps along the way? Oh, well, we sure did. I wouldn't have done these here because it's too close to the opening. But right in here, okay, I would have bought right in here or right in here. See? Lower closing candle, buy it, up it goes. Lower closing candle, buy it, up it goes. But I would have not done this one because it was just before the opening, okay? And that's it for the Dow. Okay, I think we covered the TP good enough now, eh? And the stop hunts. Yeah, lots of stop hunting in this game, this dirty, tricky game. Okay, here's the S&P. Look at it. Craziness, yeah. I do. Sorry, I'm just yawning. I'm tired. I see the divergence setup. It's right in here. Okay, but this is the opening, so I wouldn't have done that trade. But I'll put it on the chart just for you to see, just for you to look at. Okay, but it's a no-no because it's just before the stock market opened. Okay, it's right here. See? Right there, lines up. Pull it up here, you can see it. You see the divergence, right? You see it. So you would have got in right here. And that's just before the opening. See, that's at 9:30. You ain't going to go long at 9:30. Because what if they sold it off right away after that? Then you're screwed and you lose money. Okay? However, 10 minutes after the opening, we had these two lower closing candles. So like I told you, you wait for price to come back into the zone in between the 5 EMA and the 7 EMA, shift 1, okay? You would look to get in on a closing candle. So this one is not in, it went through it and came back, but it did not close close to the 5. So this next one closed right on the 5 or very close to it. So you would have bought right here on the opening of this blue candle. Remember, you got to wait for this to close. Then you buy. So you would have bought right there, and it would have been the perfect dip to buy. Buy the dip, sell the rip. Yeah, baby. And it went up 17 points. Look at that. And then they just rammed it right down your throat. Didn't they? And look, they're taking it up again, the bastards. You fucking bastards. Yeah, okay, let's move on now. That was the S and the P, baby. The S and the P. Let's now look at oil. What did it do? Oh, yeah, it's coming back down again, you bastards. Look at this chop, man. Woo-wee. And yesterday it moved so good, you know? Look at yesterday. I still didn't. Look at this. Up, all the way back down, all the way back up. And now look today. Chop, 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 chop. Yeah, that's what it likes to do. That's what it likes to do. Okay, did we have a trade today on oil? We did. We definitely did. What did we have? We have a double top. Double top, man. Double top. Right there. Right there. You would have got short right on the opening of this candle. And you still would be doing good. Right here. Boom. Right there. You would have got short right there. Even though you have support there. I don't know about that. $82 support. $82 per barrel. But if you did get short here, guess what? You're making 34 points. Points, pips, ticks. You're making... Oh, God, this drives me crazy. I got to remember 3 fucking things to call it. If I'm trading oil, I got to remember ticks. If I'm trading Forex, I got to remember pips. If I'm trading the NASDAQ or the S and the P, I got to remember points. Points, pips, ticks. Oh, my God. Anyway, went down 43. What was the stop? 30. You would have got your 1-to-1 win-loss ratio on oil. Let's look at gold now, ladies and gents. Oh, gold, not good. Gold, bad. Bad boy. Bad. Very bad. Gold is very bad today. Oh, shit. Look at this chap. Ah. Okay, I'm not even putting an arrow on that chart. I'm not touching it. It was a mess. I feel sorry for all of you gold traders today. I do. My heart goes out to you. Let's look at the pound yen now. What did it do? I saw a trade on here earlier. Where the hell is it now? Oh, I see it. I see it. I see it. Right here to right here. And right here. Even if I put it there, it's divergent. Wherever I put it is divergent. You would have got long in here. So your stop would be 10 pips on the pound yen, and it went up 32 pips. There's 3-to-1 win-loss ratio. Let me see here. Do we have another one? Yeah, we actually do. Look at that. We actually do, Scooby-Doo. We do. There's divergence again. You would have got in right there, man. Hidden divergence right there. You would have got long right there. 23 pip stop. And it went up 31. You got your 1-to-1 win-loss ratio plus. You see how these setups occur? It always, when they happen, it's like magic. To me, it's like magic. It really is. Hold on a sec. There we go. We just gotta lift that up just to show it better. Okay? But if you ever notice, well, I've noticed, because I've been trading this same thing for 11 years, you know, with my same 2 moving averages, the OSMA tool to find the divergence down here, okay? I've always noticed that when the setup happens, right, and not long after, we get the cross up first, right? We get the price moving up. We get the price closing up above the moving averages. And you just get in, and the way it goes. You know, oh, there's the one I missed. I'm sorry. We have a high, a retracement, and a higher high. And right there. See that? See, we see the setup on the chart, then we go down to the OSMA and make sure that it's cooperating in the opposite way of this on the chart. And then all that we wait for is for the 5 to cross below the 7 and then close below the 7 and the 5. And then you look for your higher risk entry right here to sell it, or you wait for a better price entry. For another 5 minutes you wait. I know you want to get in. I know you want to make money right now. But you got to wait. You got to have a little patience. And then you would sell it on the opening right here 5 minutes later. And what happened? What happened, ladies and gentlemen? Your stop is always the closest swing high, like right there, 16 pips. And what happened? It went down, and it went down, and it went down. 25 pips, ladies and gentlemen. You would have got your 1-to-1 win-loss ratio. 16 pips stop, and 25 pips it went down. But you notice that? See? Right here, we have our low retracement, higher low. As soon as you waited for it, boom, you got in right here, and up it goes. Right here, see? High retracement, higher high. 5 crosses down below the 7. The price closes down. You either get in there or here. You get in, and down it goes. It's like everything just falls into place. And that's why this fucking divergence, especially my system, how I have it all laid out here, it fucking works, man. It fucking works. That's why I'm showing you this today. And I show you other things too. And if anybody's talking shit about me saying, that guy's showing you something in the past. Yeah, I am. But also in my course, it shows you how to find it in advance. And once you look for these setups in advance, you'll see that you can get in exactly right here. You can get in exactly right there and there. You can. It's all, you just got to see the divergence. That's it. Anyway, let's take a look at the Euro Yen now. What do we see there? Ooh. Oh, I just had enough. I just had enough water to wet my whistle, so I can keep going. Blah blah blah, blah 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 blah, blah 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 blah, blah 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 blah. Okay, let's go. If you ever heard of a band called Rush, a rock band, they are from Toronto, Ontario, Canada. They are famous worldwide. When they finally got that award there, I don't know the name of the place, and Alex Lifeson, the guitar player, comes up and says his little speech after he got the award, and he goes, blah, 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 blah. He did that for like 5 minutes. People had enough of it. He kept going. Yeah, crazy nut. I've been a Rush fan ever since I was like from 1975. So I was ever since I was 11 years old. I'm a Rush fan, and they're a great band. There's 2 3-piece bands that are really good from Canada. One is Rush, and the other one is Triumph. Yeah, they have just 3 people in the band. The drummer, the singer, which is the bass player in Rush, and the guitar player. Very cool. It's unfortunate Neil Peart passed on, but what can you do? What can you do? Okay, I'm calling this a double bottom. Okay, it's not quite there. No, it doesn't have to be perfect. Nobody's perfect. Nobody. Oh, let me hold on. Let me show you this one first. Oh, what happened there? I don't know. Some freaky freaking thing. Right here. Okay. See the little blue doodah? Let me pull this up. See that little blue doodah? Yeah. Does it line up with the exact very top up here? Oh, it does. It does. It freaking, oh, maybe it doesn't. No, usually it does. Ah, I made a liar out of myself. Usually when it creates a little blue dot, it's the high. It's the actual high. Anyway, not that we're looking at it in that way. My observation, usually it does. My observation was wrong. Sorry. So anyway, you would have got short right there. Your stop would have been 16 pips. This is a euro yen. Went down 20, which was good. It was a winner. It was a winner according to my rule of 1-to-1 win-loss ratio. Okay? That's why I always say we've hit the 1-to-1. It's a winner because we're only going for the amount of the stop is the take profit is the exact same amount of your stop loss. 1-to-1 win-loss ratio. Okay, so we would have got short right there. Our stop is at the nearest swing low, 17 pips. And we got our 1-to-1 because it went far and beyond 17 pips, which was our stop. Okay? Oh, it says 17 pips. Okay, 17 pips. There's 20 pips right there. You would have got it in 15 minutes. You're 1-to-1. Like I told you before, and try and like embed this in your mind and don't forget. 80% of the time, price either chops around or turns corners and goes the other way. Okay? 20% of the time, it might go on a long trend. So all you traders, yeah, there's that famous saying of cut your losers short and let profits run. Yeah, okay. Well, it's very unfortunate that 80% of the time, price does not run like that. It stops, it chops, and it turns around and goes the other way. So if you don't take it, you don't take your profit, the market will. You see what I'm trying to drill through to you guys? That's why I go for the 1-to-1. I don't go for 1.5 to 1. I don't go for 2-to-1 or 3-to-1. I wish these markets trended longer. I would go for larger targets, profit targets, but they don't. And that's what messes a lot of people up. I see them, these traders on YouTube, these streamers, oh, okay, it hit their first target of whatever, 5 points or some freaking thing. Then they have a second target. They move their stop to break even on the second half of their order, and then they see that the price is going a little bit. They keep fucking, like 9 times out of 10, they keep moving their take profit, higher or lower, whatever. They keep increasing their profit, their second target, and it never goes there. And then they move their stop to break even, and if it goes a little bit more in their favor, then they move their stop from break in. They move their stop from break even. They move it higher. Say they're in a buy trade, and what happens? It stops. So instead of making, they could have made like 25, 30 points if they just would have took it. But instead, they moved their stop from break even, you know, up, say, whatever, 5 or 10 points. And then it retraces and it stops them out with half the profit they just had if they would have took it. There's the famous saying, if you don't take it, the market will. Anyway, I saw that today. I'm not saying which guy streamer I saw it on, but I've tried all these things, you know, like 1 or 2 times out of 10 you might catch a runner. Okay? And it's okay to keep moving your take profit, you know, farther. You know, in hope that it's going to go there, and maybe one time out of 10 it will go. Keep going and you make more profit. But most of the time, when you move your stop from break even, you move it up a little bit. If you're in a buy trade, it's gonna stop. It's gonna retrace. It's gonna do one of its little stair steps and stop you out. So if you trade like that, how many times? Come on. How many times does it come back and hits your stop that you just moved up? Yeah, I know how many times. Okay, let's look at the last symbol of today. I hope you got a lot of knowledge from me today. I'm happy to share it with you. I really am. Okay, this is the pound dollar. I see one trade. It's like way over here, man. Well, you could call this a double bottom right there. That's in the UK session. But right here, okay, there's no divergence. Because this over here needs to be higher than this over here. And it's not. Not even over here. Look at all these dips, but no hidden divergence all the fucking way up. Look at that shit. So, according to how I trade divergence, there's no divergence here that I can see. Well, there is divergence. There's like, but if you took it, you were screwed. Yeah, like we got a double top right there. And this there, see? But if you sold right here, what happened to you? Well, it crossed up and kept going. That's what happened. You lost. Because you sold against the trend. Anyway, the only trades I can show you today is right here. So here, is this it? Oh, that's 15.15. Anyway, lower closing candle, buy it, up it goes. That was a winner right there. Lower closing candle, buy it, up it goes. That is the open, yeah. No, that's 8.30. What am I looking at? Oh, the pound, 8.30. So yeah, lower close, buy it, up it goes. Lower close right here. And touching the moving averages in the trade zone like I told you the other day. So you would have bought it right here and it took a while and it went up. And here's another one right here. Lower close, buy it right here and up it goes. So you had scalp trades today, but there was no divergence setup that I can see other than this one right here, which is trading against the daily general trend, which was up. Just like all these arrows say up, 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 up and away, up and away. Okay. Once again, my name is Jason Sweezy. I trade divergence and I trade lower closing candles in an uptrend and higher closing candles in a downtrend. And that's what I just show you about those. Lower close and up it goes. Lower close and up it goes. So thank you so much for being here today and watching and listening. I appreciate it. I hope I've taught you some of my over 22 years of trading knowledge. I hope I shared some good value with you today. I hope you've learned from it, and I hope you apply it in your trading and you become successful. and become a better trader. That's my goal, is to share what I've learned, and I've learned a lot of tricks from a lot of different traders. Just like when I was a bricklayer and I worked for 50 different companies, but I learned tricks along the way, which made me a better bricklayer, and today made me a better trader. So anyway, I guess that's it. Have yourself a great have yourself a great day. Good luck and good trading.